Hey, everybody. Jamie here from the Keeping It Real group, powered by the incredible Crossroads Realty. We're back in the studio again today in Toms River, New Jersey. That's Ocean County for all you people keeping score at home. Another webcast of the Keeping It Real with Jamie. Donna is behind the controls as always. So let's get right into it. I got some great guests here today. We'll get to you guys in a minute. I just want to touch briefly on my Deleting RE Heroes program that I'm really getting into, and I'm proud to be part of it, that we give back to the heroes of this country, meaning active and non-active military, veterans, police, EMS, and fire, the true heroes of this country. I believe that, and like I said in my video, I'll go down fighting over it. I don't believe there's enough love given to them, but we are giving back. I'm personally giving 10% of my commission back to anybody. That's buying, selling, and it's not like a rebate that you got to fill a bunch of stuff out and get it 6 months later. It's at the closing table. And I've also teamed myself up with 3 other people who, in real estate, you need, and they're also giving back. And 2 of them happen to be sitting right here with me from the Advisors Mortgage Group in Toms River, New Jersey. We have Matt Patterson with us today and Nick Esposito. Shit, I hit your mic. Sorry.
Thanks so much.
But anyway, guys, thank you so much for coming and for being part of this great organization. I know, Matt, you have like close ties to this because of a family member. Why don't you start off?
Okay. I do, and I've been passionate about this since we started, which for us it was, I think, Military on the Move originally.
And I
that's
believe
what it
that's what it
originally
still
was.
Oh, it's not called that anymore.
No.
And,
Okay.
Yeah, but so it goes back to actually its inception when it wasn't everybody doing it. And the passion with me is my dad was a 100% disabled vet from World War II. So I spent a lot of time at Lions Hospital and in East Orange as he got better and better. But he was in the Pacific end of things, and he saw 21 major campaigns. Iwo Jima, Saipan, the names go on and on and on.
That was hell.
That was.
Yeah.
And the only cross he does not have, or medal that they call it, is the occupation of Japan. He was flown back after he got hurt. Before that, I guess it was the Okinawa problem where we didn't know how we were going to go into Japan because it was a mess. It's a whole other history lesson. But so that's the only medal, and I never saw his medals because he never collected them. So, and he rarely talked about his time there. But at any rate, to get back to the passion I have for that. So, as far as the military guys, they deserve everything that we can give them. And me and Nick kind of have a battle plan for that, and we're looking forward. And that goes on to speak about the police, anybody that puts themselves out there. Yeah. And like you said the other day on your podcast, the guys who are going in, why we're all running out. Yes. And gals.
Yeah, women too, yes.
Girls. I mean, that is a certain type of person, and they deserve anything we can do to help them.
Yeah, and you're seeing so much more and more. Matt just said it, guys and girls going in there, and it wasn't an occupation really until the last 20 years. You see an influx of, a lot of women putting their life on the line, just like the men. And to us, I mean, that's really, you hope no one has to give the ultimate sacrifice. Obviously, you pray everyone comes home and everyone is safe, but I guess it is a peril of the job, and like Matt said, they're running in, and most people are not running into a fire, running into gunshots. They are. So, and even the EMS, they're putting themselves in precarious situations as well, and they're saving lives every day. So, a chance for Matt and I, as the 2 branch owners, to give something back.
That's great. That's it's way important, and God bless them to do that, and to you guys too to be part of this great thing that we're going to do here. We also have Steve Green from Consumer's Choice Title and Alan Thompson from Thompson Law, all local companies here, right? Local, and they're all part of this, and we're all
guys.
All good people. And it's the people that do all that sacrifice are the reasons we can sit here and talk freely.
1,000%.
And if we want to MF the country, which I don't think anybody should, but you have that right because of those people who laid their lives down for this great country.
I mean, people talk about it all the time. Everyone complain all they want. It's still the greatest country in the world to live
by
in.
far.
You
by
know,
far.
so but
Are
the cool.
we gonna get into politics?
No. We made a promise.
And Crossroads is the greatest realty group out there.
But
Listen, I'll talk politics, but we all might get in trouble.
But the greatest thing about the program is that, let's say you have someone who's supposed to bring, I'm going to use round numbers, $10,000 to a closing table, and now after all the discounts they're bringing, 6 or 7. Saving that money is big.
Yeah,
They could
it's
paint,
huge.
They could paint their house, go get a TV, go get couches. It's money now that they don't have to put on credit cards.
Yeah.
Really. So I think
It's huge.
Yeah, it's a
Some
great
of the
product.
Closing costs reduced.
Yeah, whatever they
Yeah.
want. It's
Yeah.
it's their money,
And
and
like
they're
you
getting
said,
it right there.
it's not a rebate that you have to wait.
Yeah, no,
It
this
is
is
immediate.
yeah.
It's instant.
green money right
Yeah,
there.
most
sir.
people need that right away too, because I know I've been the owner of several homes, and you're always kind of broke a little bit when you get in. It's always a little higher in prices and things when you're closing, and so this extra boost will be huge for all the first-time responders.
Oh, yeah, absolutely.
I'm looking forward
I'm
to it.
glad and I'm so happy that you guys are part of it because you are getting to know you guys since I've been at Crossroads. It's been a great experience.
appreciate
you guys
it,
are good guys, along with Alan and Steve Green and everybody we do business with in this company. We're pretty much on the level. Maybe I might be a little bit below that. I'm only kidding, but it's an honor to be with you guys and to call you guys friends.
No,
it really
we
is.
appreciate it
I
more than
love
anything.
hanging with you. We have a lot of fun.
Oh, yeah. Well,
I mean, you should have heard our before we were on the air episode, but that's another story. So a lot of things have happened. I think since the 20s, since 2020, and with the interest rates even this past 2 years. Nick, you were in here last month or the month
about
before?
last month, the month before. I'm a reoccurring guest now officially.
Yep. Yeah, reoccurring. Matt, you were a little under the weather at the time. You're looking
Yes.
great though now. I mean,
Well, thank
you've
you.
been through a lot, and
Yeah.
I'm glad to see you sitting here with us. We have a little banter back and forth
Oh, yeah.
here. But the interest rates, I mean, they're still a little up.
Yeah,
But
I mean,
what's your so where are we at now?
so like
Tell the
yeah,
customer.
I mean, so it really depends product specific, right?
Right.
So there's a bunch of different products out there that range anywhere from 6, low 6s up to 9, really, depending on what type of loan you're going to do. We have loans where people aren't showing income. It's not the same rate as your run-of-the-mill borrower, right?
But you can still get
You can still get
financed.
approved. And I'm going to give you a perfect example. We had a woman the other day who is no job. She's relocating here from Pennsylvania to New Jersey. She has 0 job right now.
Wow.
She had a good amount of money to put down. We got her a loan. So imagine 0. Nothing.
0, no income.
No income at all. So
You hear that, everybody?
it's
Well, those products are out there now, especially in today's market. I mean, me and Nick could spend 2 hours going over the different programs that our company now provides. See, a lot of things get outside the box when the rates go up.
1,000%.
And, we've really been ahead of the curve with this, and this really, I hate to say it, I mean, if we can't do the loan, our company, it probably can't get done.
Right.
Because we have so many broker and
1,000%.
outside the box programs.
And a lot of these products we're actually using our own money in the parent company.
Right.
So a lot of companies out there broker these to outside investors. On 80% of them, we're actually taking them on and underwriting them ourselves.
Wow.
So it's nice to be also backed by
A big company.
a good company. They get it. A lot of good companies out there. Don't get me wrong, but I mean, the owner of our company, Stephen Meyer, he gets it. So he does everything he can to make sure branches like Matt and I,
Right.
just like Crossroads does for you, right?
Yeah.
So we've had our own branch here for almost 11 years.
11 years now.
Yeah, we just
Yeah.
Holy cow.
well, it was in
Good
June.
for you.
It'll be 11.
Wow.
And we've had a branch for longer than that, but here at Advisors for 10. And in a business that you see a lot of turnover and a lot of change.
Yeah.
It's good because we know we can make a phone call, and we're like family to them. So
And that's
it's nice.
huge when it comes to mortgages. I mean, if you people have been through it, so many things could pop up.
So yeah, I mean, like getting right now, I think the big thing is meeting closing dates.
Right.
It's scary out there. You see, Jamie, you get a pre-approval from a bank you've never heard of or a mortgage company you've never heard of. Not saying they can't get the job done, but you're white-knuckling it. You don't know who to call, where to call. It's nice to have, like you said, your team in place that we could
Yeah, I've had
make
a
phone
few
call.
experiences with that. I try to get them, and then no, we're going to use what's that thing flying? What's that?
Yeah.
nothing but disaster.
It's just they're in a cubicle in the Midwest. I mean, it's experience. Like people say, we talked about it last time on the podcast. What separates? Product knowledge, knowing how to take apart a deal, structure a deal.
Huge.
Service.
You can reach me at 10 o'clock at night.
Yes, and I have.
And you try getting a bank at 10 o'clock.
Yeah, it does not happen. No, it's just hard.
And I'm not bad-mouthing it. Well, maybe I am.
Yeah,
but,
listen.
The thing is, we try to provide him with two managers like we ever get. 2 minutes in one, I call it. You're able to reach either myself or Nick and get an answer. Because when he's off, I'm on. I'm off.
No one's really ever on vacation.
Well, I've had that a couple weeks ago when I called you on a Monday. Hey, 2 minutes later, Matt's texting me, "What's up? Nick is off today. I'm covering. What do you need?"
Exactly. And
that's
huge.
You
didn't lose.
Didn't lose. I didn't lose
skip
3 minutes.
Nope.
Yeah, that goes a long way. And and it just always seems that I'm giving you hard cases.
No.
But
you trusted us with your family. We financed your aunt. I mean, that was or your cousin. One of the two.
My cousin coming.
Yeah.
Yep.
I mean,
of course, I'm going to use you guys. So, with everything going on now, last time we talked, everybody was nervous. Had the election coming. Okay, the election's over. We got a new administration coming in. How do you feel it's going to be coming up after January 20th when the new regime takes over?
Well, and me and Matt have had conversation upon conversation about this. It's not something that it's taken over and like the floodgates open up and it's immediate. I mean,
no.
Now, can that happen? It's possible. I'm going to tell you, if we're betting, that's probably not going to happen.
No, I wouldn't think so either.
Now, this new administration coming in, if you compare last time, this new administration does like lower interest rates because their ideology has always been, if interest rates are lower, you're spending more money in the economy.
Right.
Now, there's two schools of thought of that, right? You spend too much in the economy, it can get a little inflationary, right? And that's what everyone is. I think that's the number one fear in the world right now. Rates were in the twos in 2020 and 21.
Which is ridiculous as well.
Which actually didn't. It was good because people spent more money, but it could become inflationary, right? So a healthy market, Matt and I have talked a bunch of times, is like low to mid fours. Just like your guys' inventory of 6 months is a healthy market. I mean, at one point it got to like 0.1 month. So, I mean,
still low.
Yeah. So that's kind of what we, have been ascertaining and feeling is that, yes, we think rates are going to be coming down. The goal would be to probably be in this year some point around 5. That at 5, what that does, and people don't really realize it, is that, the average mortgage rate in the country is in the 3s somewhere. Okay, it's not in the 2s, the average. If you take all average, right? Probably closer to 4. People didn't care going from 3 to 5. They cared going 3 to almost 8, and that's why they said, "Well, when they pump the brakes, I don't want to. I might be able to get $100,000 more for my house." But where am I going to go?
You got to spend $100,000.
Now, they don't mind upgrading, but now I'm upgrading and tripling my interest rate, or doubling 2.5 times my interest rate.
And a lot of times, Nick, that's a lateral move also.
1,000%.
I mean, you're not moving up that much to spend that much to, make that move, and that's one of our problems.
Right.
Inventory, which we'll get into later. But Nick's absolutely right with that. If these rates could get into the high 4s, I think that would stimulate everybody to start to think about either right sizing, which I call it's retirees moving into a smaller home, and it qualifies so many more people.
Right.
6.5 down.
Oh God, yeah. I mean, the big thing about it is that when you make that move up, buy that $150,000 more house than yours, and your rate only goes up 2 points, say, or a point and a half, you're getting that upgrade feel. It's that when your payment goes from $2,000 to $6,000, it's tough for some. Obviously, tough for money. Yeah, I mean, everyone knows the payment's going to go up when they upgrade most of the time.
Right.
So it's very rare you upgrade and payment goes down or stays the same.
Unless you bought.
Exactly. You owe $100,000 on your house, you sell it for but I'm talking about apples to apples. That usually does not happen. So right now rates being in most of the deals we're doing are in the 6s somewhere.
Low or
we got some lows. We got depending
credit.
on the day. Depending on the day. Excellent credit. Yeah, absolutely. And we're actually FHA. I got someone 5.75 yesterday.
Wow.
Or 5.6, one of the two. I forget exactly, but I mean they're coming down. So
Do you think it'll be in the low to mid fours or mid to upper fours come next year?
I mean, it's possible. Again, if we're hedging it, me and Matt said we'll be happy at 5.
Okay.
I'll be
But
really
it's not
happy.
going to be a right away thing.
No.
I think halfway
is.
through the
This
year,
new
probably.
administration has to go in. The one nice thing about this president is he's very familiar with real estate.
Yeah.
And I don't want to get political with anything, but he's always, bought, sold, mostly commercially, but he understands what has to be done in order to stimulate that market. And let's face it, real estate drives a lot of this.
Oh, yes, it does.
38%.
Yep.
Wow.
So it is huge. So I think within a year we'll see these rates to where we'll be happy. Of course, I'd like to see him go back down to 2.5, but I think that's never going to happen again.
Well, you know, it's funny. We said it was never going to happen. So in 2013, they went to the low 3s. They pretty much touched like 2.99, and they did it for maybe 3 months. And we said it's never going to happen again, and then it happened for 2 years.
Yeah,
so, you know what I'm saying? Like, people were getting 15-year rates in the 1s. Wow. Like, if you think about that for a second, 1.7, 1.8 so. If you're doing you did a 15-year mortgage, I mean, you're never going to touch it, and you're going to stay. I'm talking about if it was your lifetime home, you're not going to touch that rate. I mean, where are you going to go? So the refinances that we've done this year, just to show rates, have been mostly people taking cash out to pay off debt. Right. Consolidating, which is a huge market. People did get into a little bit of trouble credit card wise. So, but I mean, again, we're going to be really happy. If we're consistently low 5% to low 5s next year, right. I think everyone's business in this real estate space, you'll be happy with the production you're doing.
I know I'd be happy.
I mean, you'll be able to get more listings, and be able to, keep building the Keeping It Real group and make sure that, you guys do business the right way, obviously, with all the changes that happen in your world.
Right.
I mean, in the last year, you have to, just like you have to pick a mortgage company and a bank that you service. I mean, the product knowledge.
That's part of the service.
But I mean, the product knowledge that you guys had to go over the last year. I mean, you guys,
yeah, it's crazy.
Really had some wild changes.
How do you see the effect of those changes within the mortgage world?
What do you mean?
With the buyer's agreement now, with the buyers, do you see a lot of them asking, giving 10,000 over and then moving that back towards a credit?
I've seen a couple, but to be quite honest with you, and this is just me, most of the deals we've seen, the sellers are putting out commission.
Still saying
it's not really where they're saying we're not going to give out any commission.
And it also has to appraise. I mean, you could put
exactly.
Let's put 10,000 on it if it doesn't appraise, which we haven't really seen.
No, we haven't seen many, especially in this market.
And I've been an appraiser my last career for 30 years, so we pretty much know what's going on before it happens. But you can only throw so much on a house, and then it's not going to be of value.
But I think I mean, you've seen, this is more for you, Jamie. You've seen that most of the sellers are.
I brought it up. You have to bring it up to your clients, when you're in a listing agreement, and right away you see their eyes light up when they say, well, you don't really have to give a commission, but
this is
I did the but once in the first one, and I got phone calls from angry realtors. I mean,
bet you did.
Man, they were yelling at me, calling me names and everything.
It's not you though. That's the crazy part.
Yeah,
in New York, they've been doing buyer's agreements for the last 6-7 years.
Connecticut too. Yeah,
it's not something that was new to them.
No, so it's new here, and like you said, I've noticed everybody's giving.
Which is crazy. They did all this to almost keep it the same.
Yeah.
I thought it wasn't a broken system. You paid on the way out. You didn't pay on the way going in.
Yep.
You know what I'm saying? Like, I don't know why.
The buyers are the ones bringing the bag of money anyway.
Exactly.
So if you look at it that way, they were paying it from the beginning.
No, but my point is, you really paid it.
Yeah.
When you sold, but you didn't pay it when you bought. I mean, I don't know. That's almost.
I don't. Yeah.
And that old system's been around since the beginning of time in New Jersey.
Right.
So to make we all know how we feel about change, and
our industry has been changed.
Yeah.
Shaken up.
You guys have seen nothing. We get changed constantly.
We've had 5 or 6 major changes in the last decade.
Yes.
Wow. Yes. Yeah. Remember you bringing that up last
since
time?
09. Since 09 is really when the changes started.
Wow.
So
it's always something.
When I got into mortgages in 1999, the disclosure package, the application was 17 pages for a conventional loan and like 22 or 23 for an FHA loan. Now it's in this almost 60 for conventional and 70 something for
Wow.
FHA. Just more and more disclosures.
I think the only ones who really made money off of this whole thing were the attorneys.
Oh yeah, they made.
I mean, come on.
Was it 300 million or something like that? I read quick.
And I
don't
think
know.
what's the household? I think when it's all going to get $30.
Yeah, it's something
ridiculous like that. So
Class action
obviously,
suits that usually happen.
Yeah, the lawyers made all the money.
Yeah.
Nothing
And
against you, attorneys.
No, listen,
but
I get
come
it.
on.
They saw an opportunity.
Yeah.
Listen, all of us could wish we saw that same opportunity. You know, I would like to pocket 100 mil.
You and me both. Yeah. Listen, I'd be happy with 500,000.
We'll be on the islands doing this podcast for fun.
That would be nice.
I think all the realtors are figuring they all have that down now.
Yeah.
The new system, and that'll be something that we'll complain about for another 6 months or
Yep.
so.
Yeah.
Everybody gets.
It's gonna
used
be the
to it.
norm.
It's funny what you get used to.
Yeah.
How many times have we talked about that? We would be mad in our office. Me and Matt shared an office for our whole lives together. We complained about it with the door closed, and then in 4 months we kind of forgot what it was like not to do business that way.
Right.
So it's kind of funny that that's what happens.
It's definitely changed. But listen, I'm all for it. It doesn't matter to me. You got to do what you got to do.
Yeah.
If you're not going to make the changes, then get out of business.
I do want to say something, though. We talk about interest rates, and you see, the Fed is dropping the rate, like they're supposed to get on the 18th or whatever of September. I like the stimulus it brings of clients calling and asking, but you really notice change when they do something that we don't think is going to happen. So, like, they've been talking about dropping the rate a quarter this December since the last meeting. So, Wall Street and the bond market, the 30-year bond market is which mortgage rates are really generating on all the mortgage-backed securities. They already know it's coming.
Right.
So, if they lower it a quarter, nobody is surprised. So it's kind of like rates have been going down a little bit over the last month because they're anticipating that. Now, it happened not this year, but in 2021. If they shock us and lower it a half, now you're going to see some knee-jerk reactions and rates will really drop.
Right.
The chance of that happening right before the new year are very slim. I don't think it's going to happen. I think it's going to be a quarter or stand pat. That's what I think. Obviously, they're not going to raise it. We know that. So, but here's the thing. If everyone anticipates a quarter and they stand pat, you're going to see rates go up because they've already been anticipating this quarter point.
Right.
So, and this is a key topic. People always ask what that actually means. When the Federal Reserve drops the rate a quarter point, all that means is they're dropping the rate. That's the overnight funds rate that banks borrow from the Fed. So it has nothing to do with rates drop a quarter. All the interest rates drop the quarter. They may drop a little bit. So it's how much the banks borrow from the Fed. So every dollar you have in the bank, okay, the bank could lend that money out almost 10 times to 1. So if Jamie Lasasso has $1,000 in the bank could leverage your deposit up to $10,000.
Wow.
So they could lend. That's how banks make money.
Right.
They lend up to $10,000 on credit cards at 30%. If you have $1 million in the bank, they could lend out $10 million.
Wow.
So now they're borrowing all this money from the Fed. The Fed rate right now is in the 5s. So if they're borrowing it at 5 and lending it out at 20-something on credit cards, it's a big moneymaker.
Yeah.
That's why big banks don't really love doing mortgages.
No.
Because they're borrowing it at 5, lending it out in the 6s. They're making
25%.
they love personal loans,
I
they
mean,
love
that makes
auto
sense.
loans, and they love credit cards. That's where they
why
make
you
a
see 'em
bulk
all
of
out
their
there
money. And
advertising.
that's where they make a bulk of their money because they're borrowing it at single digits and lending it out at double digits.
Wow, that's crazy.
So that's kind of a little quick what happens and why.
It's all about the bond market, though.
Yeah, mortgages are all about the bond market.
We're on a system where we get notified, about every hour or two?
Every couple hours,
Yeah.
if there's any major movement, because it's very hard to track
need to know that.
mortgage-backed securities.
Right.
It's not something that you could just go on Yahoo Finance and track. The 10-year Treasury, you can, which is it's an indicator, but the mortgage-backed securities are really, which is traded, in the background. So it's something that you have to be on with a service to be able to track it, a paid service.
You getting all that, everybody?
lot-
Some
lot of
great
good-
information
lot of
today.
There's a
Wow.
lot behind
Yeah,
it,
a lot of behind the scenes.
Yeah, our corporate office actually gets us a whole. All the branches have an account, so we use a service called MBS Highway. It's a leader out there in the mortgage world. So it's something that's good. We could actually get you some content from it if you like, with your picture on it, if you want to market some stuff so you can see it.
Oh, okay.
Yeah. Just so, for information. People don't get it, but they'll
No.
see it and they'll understand it. They don't do what we do every day.
Yeah.
So I don't expect, when people do body work on a car, I don't see it every day, so I have to just trust my guy.
It's funny you mentioned that.
Yeah, I know. That's why I mentioned it.
Wow, that's some great information.
Yeah.
Like I said, we could go on for 2 hours
Yeah,
about everything from the government borrowing money, which isn't a good thing, constantly, and not being able to have a set budget. All these things are indicators and problems to why the interest rates turn out where they do.
We're hoping for a good 25, though. There are a lot of good predictions,
indications,
coming.
That are
coming.
Vibes out there too.
Yeah,
A lot of good
I got good vibes.
Think about it. When more,
I think most of the country does.
Yeah,
and that's half the battle. It really
Yeah.
is.
That confidence, that consumer confidence means a lot.
Well, even like the clients that I have right now, like I've been working with them now for a while, and they're like holding off. I'm going to wait till the first of the year. Blah, blah. So hopefully, they're all going to pull the trigger, and I'm going to be running around like an idiot in January.
Yeah,
but that's
usually,
okay.
when it comes, it comes. When it rains, it pours. Always in this industry.
Yeah.
There'll be
Feast or
times
famine, yeah.
But times we don't get a pre-approval for a day or two. Then next thing you know, we have 10, and 10 people are ready to go look. It's wild.
Yeah.
So
And you have to stay on these people because they get frustrated when they
especially this market,
especially younger people when they don't get a house, and they put in 4 or 5 offers. I don't have to tell you.
That's tough.
And you, between the two of us, double teaming them and explaining, it will happen. You got to have patience.
That's what I tried to tell them. And not that I'm not a buyer's agent, but most of my clients or listings that I buy them a house and it's just so upsetting. Like I had a couple first-time home buyers this past year, and it's gut-wrenching. They love the house, their emotions high, and then, we got another offer, and and then they cry, and I feel for them.
Yeah, and the thing is,
it's tough.
As hard as it is, you have to stay motivated.
Yes, and that's the hardest thing is keeping. We're going to wait. Well, no, you didn't get this one. Your dream house is coming, and they all came, but,
listen,
and you're happy.
I get it. Sometimes renting is a necessary evil, but at the end of the day, when you're renting, the money's going to nowhere.
Yeah,
you're going to someone else. You're making someone else more wealthy.
More money. Yeah.
And,
but when you got these houses keep going up and up, and you don't get on what I call the escalator, because the house goes up $10,000, and they're not staying up with that. So you need to get in the one house to get started where your appreciation on that house.
Starts.
It's a vicious cycle, but you do. And waiting usually never ends up benefiting you unless the parents give you more money,
or you hit that
like
diamond in the rough, which in this market isn't happening.
It's tough.
Yeah, you're not catching that.
Like
luck.
even the rentals now are insane. My last couple deals have been rentals, and I just can't believe the money you're getting.
Oh, I
for
mean,
these rentals.
like I said, stuff that was.
Mortgages are less than the rentals.
Yeah, I mean, sometimes, or they're 100 or 200 more, which makes sense. Like, the thing is, rentals were 2,700, 2,600. Now they're 33, 34. Yeah. It's wild.
Even over in Holiday City,
what are they getting for rent over there?
2,000, 2,200.
And these are 1,500 square foot houses.
Not even. Yeah. One was 12. Yeah. And within a week, they were gone.
Yeah.
Both of them.
Yeah.
So it's crazy.
Yeah.
I remember when all the mortgage people used to laugh at me when I did Holiday City because it was $100,000 for the house.
Not anymore.
And stuff. Not anymore. So I have a good grasp on that. I've been doing it a long time. And those houses are now three.
So
dude, 469. I saw one.
Oh, there we go.
I look at the hot sheet every morning in my area. That and when I get on the computer, and I'm like, holy crap!
Like those are those are like brand new updated, right?
Yeah, completely updated. 1,800 square feet.
Yeah.
They're beautiful.
But they're still two bedrooms, right?
Yeah, 2 bedrooms.
Yeah, my parents are in there. They got one that was gutted from a builder. The guy came in, gutted it. Siding, roof, the whole nine.
Yep.
They got it in 2017 for $248.
Wow.
That's one of the ones that are worth mid-4s.
Yeah.
Yeah.
Yep. Yeah. It's crazy what they're going for. Like even the small ones, it's just I'm like when I see it, I'm blown away.
You got to see Matt. You got to see Matt in my town, Point Pleasant. Forget it.
Yeah.
Can't touch anything in there for under 500.
Well, yeah, there's one on my uncle's street. I looked at it this morning off of Bridge Avenue. It's a little tiny house. It doesn't even have central air. $599.
Oh, is that the one? Is it a Cape?
Yeah.
It's on Lewis Road?
Lewis, yeah.
Yeah, now they just lowered it to $559. But
did he?
Yeah. but the thing is, it shares a parking lot with
Butler.
Butler's. But it's a nice little street, though.
Oh yeah. That's my uncle lives down the end of that
It's got
street.
a big lot to it.
Yeah,
too.
big long lot.
So,
Yeah,
Thin but long.
yeah.
we both live in Point, so we're
That's right around the corner from my house.
Is it?
You
All right,
can walk
I'm
right
over there a
across-
lot.
and you could walk right across the street. You're in a liquor store getting bourbon.
Yeah, Gerard's. Gerard's.
Gerard's.
Yeah,
Gerard's
no, I've
liquor
never
store.
been there.
Little
Drinking
plug.
and
Yeah,
driving.
little plug. You just walk over there.
Little plug for Gerard's.
Oh.
And there was a barbecue joint built.
Yeah,
in.
the
Is it
Hickory
still-
Hog.
I hear
Hickory
you don't
Hog.
smell any barbecue when you go by it.
No, it's
so,
it's in the same shopping building as Gerard's. Look.
Yeah.
They should blow that out because I know Pat's Pizza down the road. For some reason, that breeze comes out over the neighborhood.
Yeah, you smell the cheesesteaks.
The cheesesteaks. Let me tell you something. That guy makes a good cheesesteak.
He does.
In
He
there,
does make
man.
good
I
cheesesteak.
gotta give him that.
Yeah.
Yeah, I like it there.
I've had way too many.
both.
All of us have.
Yeah.
Well, after the first of the year, as the rates go down, so will our weight.
Yeah, that's what
I'm
I'm
trying. I started yesterday. I had pastina. That's all I ate all day yesterday
Oof.
because I went on. There, I'm
pastina?
watching
Oh,
me.
that's
Oh,
his
come on,
name,
man.
Jamie. His name doesn't end in a vowel. He
Oh,
don't
the
know
pastina, little baby. They're noodles about this
Yeah,
big.
they're little.
And
It's
then-
almost like a pasta cereal.
Yeah,
if you could say
so
on that.
good. So
A little bit of
good.
butter.
Small?
Yeah, it's tiny.
I mean, it blows up a little
baby
bit.
food?
No, it's
It's
almost like a
baby
baby food, yeah.
Listen, I'm regressing.
The thing is, us
I'll be on a diaper soon.
yeah, us Italians who had no money growing up, that's what we ate.
Pastina. My mother used to drop an egg in it.
Or macaroni, garlic, and oil. Remember that?
Oh yeah,
That's
I
all
still
aioli.
eat that. She
That's all we
loves it.
made.
Aioli, yeah.
That's
She
all we
still
made.
makes that. She throws broccoli in it.
Yeah, you could do that.
Yeah, those are the days. But I got to do something, man. It's like watching me eat these days. Is like watching the Discovery Channel in the jungle when a lion starts ripping
The
shit
plate
apart.
gets bigger and my stomach gets bigger.
Oh my god, yeah, it's
You know
it's
what
bad.
I find? I use a smaller fork now.
Oh, that'll help. Yeah, that'll help.
It seems like I'm getting more food, but it's really not. These little things in life are what.
I have to try something. I'm ready for that Wegovy or what's the
watch
one?
out, yeah.
The shots that everybody's taking. They're getting thin,
It's crazy.
but they don't look healthy thins.
No, you
Like,
get that sunken face.
yeah.
Well,
I'm
as
gonna.
you get older, that happens. If you've had weight on you and then it comes off, I mean, let's face it, as you get older, that looks like you're more worn. You're damn right, yeah.
Listen, I'm right in that neighborhood
Hey.
too, and it runs in my family.
look
We're
bad
all
for
thin, but we
75.
got guts. You know, and I don't drink beer anymore.
No,
I gave it up
yeah.
because of that.
I
but
gave
it
it up
hasn't
for
helped.
I gave it up for Lent.
Yeah, for Lent, and I just kept going with it.
Oh, dude, this is awesome.
Great conversation, guys.
Thanks, James.
Let's get back real quick.
No, you guys got to come back again
Yeah.
right after the holidays. We're going to be away for a little bit in January.
Okay.
Well, February will probably be. I'm going to get my group in here. They haven't been in here yet.
We'll try to get the first week of February or something like that.
Yeah, we'll
Give an
definitely do
update.
that. Come back. Hopefully, things will
Try to get a
start
monthly
loosening
spot
up.
where we can
I
kind of
love
give
that.
a quick update.
I love
Matter to
that.
me.
I got to find out when we're going to be moving the studio.
Oh, that's right, that's right,
coming because we're going to be in our new building on Water Street. I think it's 88 Water Street.
Did they say when you
in
guys are gonna be-
January?
Oh, nice.
Yeah, it's going to be sometime in January. I took a tour of it. George Shenwolf, my manager here, took me for a tour of it. Wow. I just can't wait for that little bougie coffee bar they're going to
I
have
haven't
in
been
there.
over there yet.
No,
we
it's
haven't. We gotta get
nice.
over there.
Waterfront, man.
Chris and
Yeah.
George said we can get over there. I haven't been over
It's
there.
nice. It's going to be really nice. And I think as the people
Oh, yeah.
leave their leases, we'll get more and more of the
Yeah,
building.
that's what Chris was saying.
Yeah, so I'm really excited about that. I made the change here. This is my office now.
Oh,
I'm in
okay.
the executive
Oh,
office
you are?
now.
Okay, nice.
Yep, in case anybody was wondering at home.
So you'll be right down there.
Yeah, they turned that into a satellite office over there.
Oh, good, okay.
The other office. And I'm excited to be here.
Yeah.
It's definitely a good fit for me
That's great.
because they're nuts like I am here,
That's all that
which is
matters.
great.
You're not
Yeah,
that
yeah.
bad.
Knowledgeable people, right?
Yeah, this whole company,
Yeah,
man.
we're lucky. You're lucky the whole
know,
company's pretty
yeah,
knowledgeable.
you could go walk into any office here and you're treated like gold.
That's
you
great.
know, last week I had to go up to the Lavalette office in there and use their copier, and they made me feel comfortable.
Yeah.
Like same thing with the Manchester. It's a great company.
It's good to be
man.
like a family kind of.
Yeah, it really. That's why I would never go to one of those, the yellow or the red,
Yeah.
because they don't know. You're just who
You're
are you?
just number. You're number
Your
106,
number.
505. Like
Exactly.
you're in jail.
And this is
Exactly.
definitely a family. Everybody tries
Oh,
to work
without a
with
doubt.
everybody to make the deals work, also to be friendly.
It's good,
We have
competitive.
a lot of functions.
Yes, all the functions, and we have a good time.
Yeah.
Like we got our office Christmas party. I think is next week.
Yep.
You guys coming to that?
Yeah,
All right,
100%.
good. Looking forward to that.
Yep, that'll be a nice night.
And then, but yeah, it's everywhere any office you go. Like even before I got here a little bit earlier, I walked upstairs and the owner of the company's standing there, gives you a big hug. How
Yeah.
you doing? Sits and talks with you for a few minutes. Jim
That's
Weikert's
important.
not doing. Weicker isn't doing that. Nothing against Jim
Well,
Weicker, but them big companies, they don't know who you are.
That's
you might
important.
think you're a vendor.
No,
oh,
it's
that's
important.
huge important.
Yeah.
I know I can call Mark or text Mark at any time and say, hey, and he's going to answer me.
Yeah.
And that is huge, especially
great.
for a little nobody like me. That's huge. You
No,
know what
it's
I mean?
awesome.
So.
No, that's why we're with who we are too. We have one owner that owns this company.
Yeah.
And if I call him, he'll call me back right
That's
away.
huge.
Yeah.
I mean, if you go to a lot of these bigger companies, they don't even know who you are.
Yeah.
And I despise that.
Yeah.
So
it's big.
And especially when they try to promote that they're family this, they're not. You know, it's they're corporations.
No, I
That's
get it.
I mean, granted, we're a corporation too, but again, everybody knows everybody. Yet we're big enough to handle.
You felt you aligned with the right people for you.
Yeah, without a doubt. I was
Yeah,
so
this is
happy
great.
when I signed on here.
That's
And,
awesome.
Yeah, I'd never leave here until you guys throw me out. But listen, you guys have a great holiday.
You too.
Yes, you
Matt,
do.
Nick,
Thank you so
oh
much.
Thank you
man,
for the invite.
Listen, this is a long time coming.
Yeah,
and you
man.
guys are going to be back again.
100%.
We got to bring our guitars in here one of these times, Matt.
I won't-
Do
I
a
won't-
little
I won't
jam.
be here if Matt's
You could
playing.
sing.
You got the wrong
This
one.
might go down in history, James.
Listen, I'm all about it. It might not be the right side of history,
We can- we-
but we'll go down
we
in
can make a
history.
vinyl. You guys sign it. I'll put it on the wall.
There we go.
All right.
Guys, thank you so much
No
for
problem.
coming.
Thanks,
I
James.
appreciate it. We're going to get a picture before we leave so we
1,000%.
can put it on the web.
Okay.
And
got
we'll air this thing in the next couple days.
Thanks, guys.
Sounds great.
Thanks, Donna.
Anytime, guys.
Everybody have a
Donna,
nice holiday.
nice
Thanks, Donna.
job behind the counter over there, as always. Everybody have a great holiday. We'll see you after the new year. See you later.